Welcome back to the show. Today I'm joined by James Vanreusel, founder of Ventures. James works with organizations ranging from venture-backed startups to nonprofits, helping them build the financial structure needed to scale and create real enterprise value. And what makes his perspective unique is that he sits right at the intersection of strategy, finance, and growth, helping companies bridge the gap between what they think they're worth and what the market is actually willing to pay. James, welcome. Glad to have you here. Great. And James, I want to start with your background. You've worked across multiple organizations, startups, nonprofits, growth stage companies. Walk me through your journey. How did you get into this space of helping organizations scale financially?
Yeah. So originally, I'm from Belgium in Europe, and I came over to the US to go to business school. And out of business school, decided I would take a shot on Wall Street. So I did that for about 8 years, and that was my entrance into finance. And I grew tired of that area. And wanted to do something that was more in social finance. So I went into microfinance, which is a lot more entrepreneurial. We were launching and operating banks in the South Pacific Islands. And I did that for 5 years as a full-time CFO. And so that ignited my entrepreneurial spirit, so to say. And I left there in 2014 and started the company that I have now, Vanreusel Ventures, which is as you mentioned, a corporate finance consultancy that does a lot of, that helps a lot of organizations scale. And that was really my entrance into both the for-profit and the nonprofit world, because microfinance can bridge both. And so a lot of the investors that I worked with in that arena also bridged both. They were a mixture of foundations plus investment firms and banks. And so I was getting referrals from them to work on some of their portfolio companies, and the size of which can range anywhere from $1 million in revenue to, now I've worked with some over 100 million, but typically it's somewhere between 2 and 30 million that, we kick things off and we really start to think about, okay, how can this organization transform itself from a financial perspective to scale and get to where it wants to be?
Okay. Very interesting journey. And James, was there a moment early on where you saw a company struggle, not because of demand, but because of financial readiness?
All the time. I think what happens a lot with organizations is that, the founder has to create a product or a service that sells. It needs to have product market fit. And so unless you have that, there's really no revenue or income or cash flow to build the organization. And so what I see a lot is organizations that are successful, as you said, with product market fit, but the back office doesn't keep up with it because it's underinvested into. And what I see a lot is the CEO can keep the numbers in their heads until it's about a 1.5 to 2 million revenue company. And then they kind of lose control and they start to get sleepless nights because they start worrying about running out of cash because they can't do the math in their head anymore. And so usually that's already too late for us to step in. But I've stepped in a lot at that point where we have to really look at the books, because usually they've been just working with a bookkeeper for 5 to 10 years. And then we step in and just say, okay, let's clean it up a bit, make the whole system more professional so that if they do need to be reviewed or they need an audit or they need something else, they'll pass. And they can also go and raise some money, whether that's, not everybody wants to raise equity, but sometimes you want to raise some debt from the bank or from venture debt providers or something else. And so just having your house in order when it comes to the numbers is a really important platform to start scaling off of.
Okay. And James, one of the themes that really stands out in your work is helping organizations close the gap between what they believe their business is worth and what a buyer or investor is actually willing to pay. Where does that gap usually come from?
Yeah. So it can come from multiple areas. And I think with AI now, you can ask the LLM pretty easily, what are the 10 areas I should focus on to close this gap? But I think some of the biggest areas that I see, firstly, and I'm mostly talking about bootstrapped companies here, not as much VC backed, making sure that the founder, the person who owns 100% of the company or the majority owner is no longer working in the business or can step out of the business. Because if you're still the chief rainmaker or you're still doing a lot of the work, it's really hard to sell the company, or you're going to have a really long earnout before that transition happens. So that's probably one of the biggest ones. Another one is just, your quality of earnings. It's going back in and just saying, can we believe the financials, and how much of the owner's personal interests are tied up in this company? Is he or she running their car through the business, even though they might use it for work, but if we got a company car, would we really use it as much, or would it be as nice?
Okay. What are the biggest mistakes you see founders make when preparing for valuation or exit?
Yeah, I would probably say not starting early enough. You can't start preparing when the desire hits you, or when somebody comes and says, I'm interested in buying you. So starting there are a lot of consultants out there that can help with this. And we do this as well. We usually come in, I would say probably 3 to 5 years before a sale, because we need to get the company's valuation up. But you can start talking to individuals who can say, hey, you need to check your employment contracts. Are they all standardized? Could there be any liabilities in there? What about your customer contracts? Does it have a change of control clause in them, so that if you get bought, the customer can't completely renegotiate the contract, can just switch over to the new company? So, and that takes time to transition. So I would say it takes at least a year just to do all these HR assessment, legal assessments, probably a quality of earnings assessment as well. And then you probably want to do what we talked about just now, which is, where are the gaps? So can I operationally change how I'm working? Can I hire, if I don't have one yet, a good COO who can take over if I decide to leave? So really thinking about those things, I would say at least 2 years before you want to sell.
Okay. And James, let's talk about growth, because that's the core theme of this podcast. A lot of organizations grow through reputation and relationships, which works until it doesn't. What separates companies that grow predictably from those that grow reactively?
Yeah, I'm in the professional services business, so we have a high trust barrier. So we depend a lot on referrals and relationships, and I think a lot of the big CPA firms do as well, and the big consulting firms. So if so that means that a lot of the referrals you get can be very lumpy. And the question is, how do you make that predictable? And in my conversations with other owners and other firms, the predictability really comes from you being predictable in your business development work. If you get too busy with clients and you take a 2-month break from doing business development, everything slows down, and it probably will take you 2 to 3 months to reaccelerate again. And you'll see that dip in referrals. So I'd say that's one thing to look at, is just consistency. I think another one that's often overlooked, especially at the early stages, is really the brand recognition. And I think it's undervalued, because in a trust-based business, you really need to have your brand out there. So you probably don't want to be paying for, Facebook and LinkedIn necessarily, but I think you want to be on there with organic growth, and you want to be present, and you want to have some content that's predictable. I think you get predictable referrals and leads from predictable business development and sales processes. And I think if you don't have those, that's when it goes awry.
Okay. And that's a great perspective, James. I want to go deeper into infrastructure? Because growth without structure usually leads to chaos. What financial systems or frameworks do you think every scaling organization needs before growth accelerates?
Yeah. So I look at everything as step functions. It's like climbing stairs. So you can grow a certain amount and then you get stuck and you can't grow any further. And I think that has to do with software as well. So if, for instance, you're using on the accounting side, QuickBooks, for example, you can, which is great to start off with, but it's going to hurt you at a certain point, right? So maybe you can grow to 7 to 10 million in revenue, but then you need to transition, and then it's like, okay, well, what's the next group of softwares you can use? Maybe it's NetSuite, maybe it's Intact, and then you can use those until you get to 100 million or 150, and then you go to the next level. And the thing with all the different softwares that are out there, whether it's accounting or FP&A or time tracking or inventory, the more complicated they are, the more upskilled your team needs to be. So you can't just say, oh, I'm just going to go NetSuite day one, which you can, because there are special deals you can have on a pricing, but it means you need to hire somebody who's more skilled, because NetSuite is more complicated than QuickBooks. A lot of times when I talk to companies and they say, I want to upgrade to this, or I want to upgrade to that, then you say, well, you might need to upgrade your accounting team as well. And that seems like, a pretty painful thing to do. Each time you take the next step, there's just complexities that ripple through the organization.
Okay, that's great wisdom. And James, what breaks first when growth outpaces structure?
Yeah. I always say that, what worked, last year might not work this year. And as you grow, things break, as you just said. I think when it's going to break because there's pain, right? And there's kind of this, as an employee, you'll go to work and you'll feel like this pain because people are saying, you'll run the budgets and they'll say, why can't you give me that number? Right? I really want to know this, and I want to know, can I hire someone for this project? And you say, that's going to take a day for me to figure out. And so there's this level of pain at work that you have, and I'm just talking about the finance and accounting team here, of people asking for things that the current softwares and the structures just can't give the answer to fast enough. And I think AI is helping with this a lot, but it's still there. And I think that's when things start to break and they don't work as well anymore. And usually when the pain gets really high, that's when you need to think about, okay, do we need to upgrade if the revenue is going to continue to accelerate higher?
You've worked across multiple industries, startups, nonprofits, venture-backed organizations. What do successful organizations consistently do differently?
I would say they plan well. I always find that the most successful organizations have a CEO who really understands the numbers. So I've worked with some that have been CPAs in the past, and they are usually, of course, I'm talking from a finance perspective, relatively easy to work with, but they also just understand how the numbers work. And if I do this, then this, if I do that, then that. And the decision making seems to happen faster when there is a very good knowledge of the numbers. And so I think, the CEO doesn't need to have a CPA or a, finance degree. But I think if you have a strong CFO and a strong team that can give the numbers clearly and explain, the options that are out there that make sense, I think that leads to a lot of success.
Looking ahead over the next few years, are expectations around valuation changing?
I think they're always changing. Yeah. I mean, I think, there's been some massive changes recently around software valuations, of course, with AI. I remember 5 years ago, it was a good SaaS business was, 10 times revenues. And now it really depends what kind of SaaS software business you are. Different M&A reports that are out there of what's the valuation that you sell at. And they typically look at things over, 1 year, 3 year, 5 years, 10 years. There is definitely consistency when you look over 10 years, but I would say the valuations do move higher. So companies are more valuable over time because, that's the way the world works, I think.
Okay. And looking to the future, what should founders be paying attention to right now?
Yeah, I just wrote down on my notebook, big picture. I just wrote down, number one, business development and sales, right? The predictability we talked about. You got to think about that every day. AI, how that's transforming your company, your industry, especially around professional services. How big of an impact could that be? Can it completely change the business model? Could you see certain companies go out of business because they're just being squeezed so much? Not necessarily around pricing, but just the ability to use AI effectively. Um, and then I think also, and this is an ongoing trend, is how well you hire. So, who do you hire in the US versus internationally in different time zones? You manage, even if you have a US company that only sells in the US, you still need to have a global perspective. And I think if you don't, then you will be left behind in the future.
Okay. James, this has been a great conversation and really appreciate you sharing your perspective. For listeners who want to learn more about your work or connect with you, what's the best way for them to reach you?
Yeah, you can always reach me via email, vanreuselventures.com. I will definitely see it. That's probably the best way to do it. Otherwise, you can go through the website. I'll see it on LinkedIn, but the email's the best.
Excellent. And for our listeners, I will be putting James's contact information in the description below this podcast. James, thanks for being on today.
Thanks, Mark. It was a pleasure, and I hope the listeners will get something out of it.